Good Thursday morning from Yahoo Finance's New York City headquarters studios. I'm Yahoo Finance Executive Editor Brian Sozzi. Today is the aftermath of Nvidia earnings, and I'm here to report this, friends. If you have been unable to sleep at night out of fear of an AI bubble exploding and ruining your entire portfolio of tech stocks, please get some rest tonight. Nvidia's quarter should put those fears, no pun intended, to bed in the near term. The AI darling's quarter and earnings call checked every single box. Earnings beat, bullish fourth quarter guidance, and upside prediction to more than $500 billion in AI chip backlog. Jensen Huang flat out telling you he's seeing everything except an AI bubble. I can go on, and I will very shortly. But first, before I do that, let's get over to Jared Blickery, who is tracking markets, tracking Nvidia. Jared, I mean, this was a good quarter by Jensen & Co.
Yes, and we saw that in the futures. We were already up substantially before that payroll report. I don't think that was the big deal for the markets. We're watching the Dow Jones Industrial average up almost 500 points or 1%. Here's the NASDAQ Composite up 2% and the S&P 500 up 1.5%. Meanwhile, small caps also doing well, up 1.25%. And I just want to show you what's happening with the VIX right now. That has been rising over the last few days. Here's a 5-day look, but you can see it has fallen sharply over these last 2 days, so it's actually negative over the trailing week. So that is a good sign for investors. Meanwhile, let's take a look at what the bond market is saying. Here's a 10-year T-note yield over 5 days, down 1 basis point. 30-year T-bond yield, that is flat. So the bond market really shrugging its shoulders about this payroll report. It's all about Nvidia right now. So let's check out sector action, where we have, not surprisingly, tech as the big outperformer today. That is up 2.35%. In fact, no other sector here is outperforming the S&P 500. That's that GSPC ticker you see right there. But also everything doing well. You can see everything in the green. Industrials, consumer discretionary, financials, communication services, utilities, all up more than 1%. And let's remember, utilities is one of those AI derivative trades. But I'm going to show you something real quick, because in this quarter, it has really been about healthcare. That's up 7%. Energy and utility posting some gains. Tech coming back today. But this has been a story about healthcare. Very defensive. I think the big question for investors is, do we get some momentum off of this report? Can Nvidia power the market higher based on that AI fundamentals that has really driven most of this bull market going back 3 years? Sector rotation is the lifeblood of the market, so can the AI trade become the forefront once again? Here's Nvidia up 4%. Let's take a look at a 2-month chart so we can see the recent decline right here. It is breaking out of this negative trend line, slightly bullish technical pattern that we're looking at right there. Really not that far off from its record highs. Also seeing some gains across the board in a lot of these stocks, and especially the mega cap trade. Here we see Tesla up 3.5%, Broadcom up 4%. In fact, let's dive into the semiconductor space, where we see a lot of green, a lot of dark green. That's a picture you got to take away. Software, not quite as bullish, but still looking at a lot of outsized gains here. Here's Oracle, tied to OpenAI, tied to Nvidia. That's up 2.75%. Shopify up over 4%. And just to give you a sense of the general risk-taking appetite here, I'm going to veer off into meme stock land. Do you see this? This is an incredibly green board right here, almost no red. So this tells you it is risk on once again. I'm actually going to close with crypto, because that is another area where we've seen a little bit of hesitation recently. Bitcoin up a measly 0.25%. So I think suffice to say, it has been a story of Nvidia overnight, and we'll have to see if these gains can parlay into something where we're saying record highs in a few days. Sozzi?
Yahoo Finance community, send Jared a check, because he just spun a lot of free knowledge for you. I mean, that's how you get a lot smarter. Jared, thank you so much. All right, here's what's on my watch list right now. Nvidia absolutely crushed it. Nvidia's bullish quarter and guidance is ripping through the markets like a backhoe at a new AI data center site. Here was Nvidia founder and CEO Jensen Huang on the earnings call last night, serving up a whooping to the AI bears.
There's been a lot of talk about an AI bubble. From our vantage point, we see something very different.
Walmart serves up its own whipping on Target and other retailers. Walmart beat earnings estimates and lifted its sales and profit outlooks as it continued to gain market share from rivals. Walmart continues to get high marks on the lowest possible food prices at a time of shopper budget pressures. The company's e-commerce sales also increased a hearty 27%. Finally, a view on the jobs market. Investors got the long-awaited September jobs report, which was delayed by a record-setting government shutdown. Payrolls rose by 119,000 in the month, and the unemployment rate ticked up to 4.4%. The stage can now be set for the Fed to cut interest rates at its final meeting of the year in mid-December. Lots to get through here today. Here in the Opening Bid Roundtable, Thomas Hayes, Great Hill Capital Chairman and Managing Member, Jim Bianco, Bianco Research President, and Yahoo Finance Senior Reporter, Brooke DePalma. Jim, coming out of the block here with you for today. How excited are you or not by this Nvidia report and guidance?
Oh, I think the Nvidia report was great and the guidance was great, and that they're going all full guns, and they're the largest cap stock in the country, or in the world, so that they're going to continue to power the market higher. But I got to push back on this AI bubbles talk. I'm not sure what the narrative is supposed to be with the AI bubble. I thought it was that there was going to be an overspend. And if Nvidia is telling us that they can't sell enough Blackwells fast enough and they can't sell enough chips fast enough, that kind of feeds the AI overspend narrative, I thought. I thought that we want to see it slowing down and that these companies were going to start worrying about profits instead of just, digging up and building more data centers.
Tom, are you on board with that?
Well, I think the big breakthrough this quarter was supply, not demand. Demand has never been a problem for Nvidia. The key was supply. They had been capped at $4 billion per quarter of revenue growth since Q2 of 2024. Even last quarter contracted. It was down to two quarterly revenue growth. Now you saw a huge jump of 10 billion revenue growth in the quarter. And what did Jensen attribute it to? New U.S. wafer production is running and partners are ready to build. So what does that tell you, Brian? It tells you that the U.S. facilities for Taiwan Semiconductor are humming and partners are ready to build. What does that tell you about Intel? Even including today's pre-market gains, Nvidia's up 43% year to date, but Intel is up 85% year to date. That is the dark horse. This is the key providing the supply for Nvidia. Is exciting to see because that they were really capacity constrained from Taiwan Semiconductor for so many quarters, which is why their growth rate was declining. This is certainly a big breakthrough. Somehow capacity and supply has come on, and it's come on in the United States. Big deal for Nvidia.
Jim, let me get back to you because you made a very important point just now, and I don't want to gloss over it. The way I read it, when I heard Jensen talk about GPUs being sold out, that was a good indicator in terms of demand. But if I hear you right, that might be a negative in that we are seeing an AI bubble that could end badly.
Well, I'm just defining what the AI bubble was, what we thought it was going into NVIDIA's report, and that it was an overspend. And that, yes, we're going to push out all these GPUs and we're going to push out all these Blackwells to a bunch of companies that cannot make the economics work for buying all this stuff. I thought that's what the bubble was. And that was the fear, is that they weren't going to make enough money. And now we're finding that, no, they pushed them out even faster, and that negate the bubble. So I'm just trying to understand what the story is. Or is the story we're just a bunch of degens, and that the stock prices were waffling for a couple of days and we called it a bubble, and now the stock number go up and now it's not a bubble anymore? If that's the narrative, fine. That's the narrative. But I thought the narrative was that we were overspending on this stuff.
Brooke, where I'm seeing a lot of this bubble-like excitement, it is this morning with seemingly every analyst on the street looking to raise their price targets on this company.
Brian, I think that there's been more than 30 analysts upgrading their price targets on the company. Some of the call-outs that I've been following include Benchmark, Barclays, KeyBank, Truist Securities, Susquehanna, Morgan Stanley, Evercore, ISI. They all raised their price target. And to both their points, what exactly they're looking at here from these banks, KeyBank pointing out that they're encouraged by these results and they raised estimates to reflect that $500 billion keyword here, pipeline. And so really still banking on what exactly this could be, where exactly this is going. Bernstein also raised their price target on the stock. Wedbush even raised their price target on the stock here. And Bernstein really pointing out here, they said that, I liked the name of their note, they said that Jensen Huang was hand-holding investors here within this report, sort of identifying the key parts of how exactly this is going to play out and how exactly they will get to that goal of theirs. He said that given his comments around off-the-charts demand, commentary on the company's competitive position positioning and roadmap, and stark reaffirmation of the likely revenue and margin trajectory next year will probably give investors more confidence to underscore a stronger for longer outlook for this AI demand. And so to that point, it just seems, to play into both parts here, it seems like this was a call where certainly Jensen Huang was trying to get investors and succeeded in getting investors to say, just hold on with us for a little bit longer. This is how this is going to play out.
Tom, is it AI trade back on? If you liked Palantir but didn't want to get involved, now that it's well below the 52-week high, do you use this Nvidia report to get in?
Not for me. Listen, Nvidia is up, 3, 4, 5%. It's back to the level it was 10 days ago. I wouldn't chase it. I would say in terms of the general market, this is par for the course. The last time we were on, we said, look, in years you get these 15% plus drawdowns mid-year. We got 20% in April. And then you reach all-time highs. The secondary correction averages over the last 50 years 6.5%. Well, guess what? That's effectively what we had intraday last year. So I do think we can get some relief in the general indices. Do you chase AI? Do you chase Palantir still at 125 times sales? Not for us. Not to say it won't work as a trading vehicle, but price is what you pay, value is what you get. We like a higher margin of safety.
Jim, I love your chart work, longtime follower of it, and you put up one recently looking at this K-shaped economy. So the stock market is going up, but consumer confidence has been coming down. And I'm really locked in this quarter from Walmart. From your vantage point, what is this Walmart quarter, which was strong across the board, bullish guidance really for the holiday season? What does this say about the state of the economy?
Well, two things. First of all, you're right. The Walmart quarter was strong, but the Target quarter was not. So there's a mixed bag when it comes from the retailers. But if I was to dig down a little bit deeper into the Walmart numbers, they did say they're raising prices, and they did say that inflation is going to keep coming. And that was the point about that K-shaped chart, is that starting after the COVID, coming out of COVID, consumer confidence has been falling while the stock market's been going up. In the 50 years prior to COVID, consumer confidence in the stock market moved in lockstep. So what changed? Why does the consumer hate this economy, even though we keep making new highs in the stock market? And the answer is inflation, a cumulative rise of inflation over the last 4 or 5 years. And I think that that's really upset them quite a bit. And Walmart just told us we're going to get more of that. So I think that the K is going to get even wider. Stock market's going to go up big today. Walmart's told everybody in the bottom half of the K that doesn't own assets, prices at the store are going to get more expensive. So I think it's just going to worsen that situation.
Brooke, you cover Walmart. You have the earnings story on our homepage right now. I think this Walmart quarter reminded the masses that in this backdrop, not every retailer is going to have a great holiday season.
Yeah, what they did say about this holiday season, they do expect it to be strong. They specifically said that holidays off to a good start. They had a great back to school trends. That was an early indicator, as well as Halloween. They said likewise for Thanksgiving. They said that everything they've seen so far has given them optimism that this will be a good holiday season. Keep in mind, Walmart is typically a bellwether for the economy. It's America's biggest retailer. And so this really is a key indicator of how consumers will show up this holiday season. But they did call out that the low-income consumer is feeling some pressure around wage growth, that we're seeing this bifurcation, as we were just chatting about, with Jim, is this bifurcation among different income cohorts between that high income earner versus that low income earner who has been pulling back. And so despite the fact that this is expected to be a good holiday, there definitely is some intrigue that America's biggest retailer pointed that out as well.
Tom, let me punt this question to you here. Lost in this earnings release is that Walmart is shifting its listing to the NASDAQ from the New York Stock Exchange. And this is a company, Walmart, very focused on technology. Is Walmart one of the new bellwethers on the outlook for tech?
I don't know if it's a bellwether on the outlook for tech, but I will say their execution is crushing it. A lot of people see Walmart earnings and they say, oh, wealthier people are shopping at Walmart. The economy must be bad. I wouldn't make that assumption. I think they're executing a lot better from a technology standpoint. If you look at their e-commerce business was up double digits, 27% 7%. So the wealthier customer goes to their website, they get great delivery, they get great access. I think Target, by contrast, the execution has been very poor, and it's reflected in their numbers. Their traffic is down. Lowe's and Home Depot, same thing, a contrast to what we're seeing in Walmart. So they are executing the store revamps. They're nicer stores, the e-commerce growth, everything that they're bringing to the table. It doesn't necessarily mean that the economy is bad. It just means that they're doing a better job at reaching out to all demographics. Both the poor demographics have done okay, that the SNAP hit them a little bit, but now those payments are coming back at the low end. And the upper end, they're appealing to them in ways that they want to shop, with nicer stores, with better e-commerce, and employing that technology that you reference.
Yeah, I have no problem going to Walmart. By all means, I mean, by no means am I a super wealthy guy, but Walmart's working for me right now, guys. Tom, Jim, Brooke, hang with me. We got a lot more coming up on the show. Coming up, Macy's stock has been bizarrely on a hot streak, but is it warranted? More on this in my Stock of the Day segment next. Let's hit my stock of the day, and it is Macy's, staying on the retail theme. This week hasn't brought great news for retailers. Home Depot kicked off the week with a weak quarter and outlook. Target's quarter stunk on Wednesday. Lowe's third quarter sales barely grew. Results out of TJX, of course that's Marshalls, Mosley, and Home Goods on Wednesday, painted a picture of a pressured shopper looking for deals. Ditto Walmart's numbers today. This sent me back to check in on Macy's. I was shocked, just shocked to see Macy's stock up 62% in the past 6 months. This is shocking, given Macy's many struggles, the pressured middle-income America shopper, and the shift to online shopping that is lifting results at Walmart and Amazon. When Macy's reports in a few weeks, it will have to deliver big to justify the run in its stock. In fact, the lines at Macy's stores on Black Friday best be wrapped around the store a few times to justify this stock's move. Let's get the roundtable to weigh in on this one. Tom Hayes, Jim Bianco, and Brooke DePalma. Brooke, you cover Macy's for us. What is this company doing right?
Well, Brian, last time I spoke to Tony Spring at the start of September, that's the CEO at Macy's, he told me that this is the beginning of momentum. And what we saw was in their latest quarterly report, following that, we saw a stock go up about 20%. And that was largely because same-store sales increased for the first time in 3 years, or rather that was the largest increase in 3 years. And it was the first positive quarter since the first quarter of 2022. And what we've seen Macy's do is really double down on how it's thinking about its portfolio as far as store closures go. It seems like there's more to come with that, and perhaps, we'll get the full final count of how many stores are closed in that fourth quarter, which he hinted to me over the phone. He said he's still a big believer in the stores, but they just got to make sure that they have the relevant portfolio of their stores. And so all those things seem to be working in Macy's favor by doubling down on fixing their portfolio and also getting the right product in front of consumers right now.
Tom, Macy's is a growth stock. You like it?
Yeah, well, this was a case of it's so bad it's good. This was a left for dead real estate play that activists had been circling around for years, trying to get them to just close the stores and sell off the real estate. So there was always a downside protection if it was liquidated. Now they've actually got someone in there who can execute. You had same store sales growth last quarter of up about 1%, some store revamps, some store closings, some better execution. Obviously, they have the higher end Bloomingdale's, which that consumer has generally held up. So yes, it's up a lot off the lows, but we're basically back to the future. I mean, this is below levels it was years ago. I wouldn't bet the ranch on this one.
Jim, what is amazing to me is that we've been talking about Walmart all morning long. You dig into their earnings presentation. Apparel was strong for them. Now, if Walmart's doing well in apparel and they have improved the quality of what they are selling in terms of apparel at Walmart, I mean, Macy's can't come out in a week or two and blow it away on earnings. What am I missing here?
I just think that the retail space is one of the more difficult spaces. As Tom pointed out, if you execute, you do well. And if you don't execute, you don't do well. And you could almost ignore the economy for a moment right now. If you're Walmart, the world's largest retailer, and you execute, you're doing well. If you're Target, you don't. If you're Macy's, you're kind of a mixed bag, and it's all over the place. And that's what makes it really hard to get a good read on what the general economy is doing right now. So, when we want to talk about what the consumer is doing and what the consumer is doing, maybe we should be looking beyond just some of these earnings reports because they're all over the place.
Tom, last word to you on this one. Any retail stocks you like into the holiday season?
I like, it's interesting. The Bank of America Fund Manager Survey had consumer discretionary stocks. Managers cut them by the most on record. I think there's a lot of opportunity in the discretionary stocks. I would maybe one step removed. I like the turnaround story in VF Corp with Bracken Darrell. That's Timberland, North Face, and Vans. Vans has been the drag. It's starting to show signs of positivity. We don't own Nike, but I think Nike is a turnaround play you could start to pay attention to in the consumer discretionary place, and some of the restaurant stocks. So I wouldn't bet against the consumer. We do like consumer discretionary here because it's been hit so hard. As far as straight up retail, we're going to take a pass on that.
Yeah, I like Bracken as well. He's done some good work there to refocus the company, sell off some assets. All right, shifting gears to my question of the day. Nvidia's big quarter reminding the market who is really the straw that stirs the drink? Or is it the jobs report reminding the markets that the Fed is really the one that stirs the drink? Let's put this one to the roundtable. What is more important to markets right now? A rocking Nvidia or a Fed leaning toward another rate cut? Jim, over to you.
Oh, it's a rocking Nvidia, and it's definitely AI. If you look at the AI and AI-related stocks, it's almost half the New York Stock Exchange, or half the S&P 500 market cap. The last time we've seen one theme dominate the market cap this big was probably the railroads in the 19th century. Everything is going AI. And if you wanted a good indication that everything's going AI, look at the announcement that we mentioned earlier. Walmart is moving to the NASDAQ. Walmart wants to consider themselves to be a tech AI focused kind of company, and they want to go where the cool kids are. They don't want to stay with Grandpa's Stock Exchange over the NYSE. By the way, ICE, who owns the NYSE, is down 25% in the last 3 months, and this is the largest defection in New York Stock Exchange history. So this has got to hurt them as well. Everything is about tech right now. It's not about the Fed.
Yeah, no, it was a big win. I know Adina's quite happy about this win. Of course, Dina Friedman, the CEO of NASDAQ. Tom, say it ain't so, really. Nvidia more important than Jerome Powell and the Federal Reserve?
Well, it's interesting. Today, for sure, this is a huge theme. And as Jim pointed out, the weighting in the S&P is so large for the S&P to go back up. This theme has to work. But if we look at the Fed, the odds of a rate cut in December, they've actually jumped from 30 to 42% in the last day, which is surprising to me. So that doesn't hurt either. Part of that probably related to the jobs report, et cetera, the unemployment rate ticking up. But as it relates to today and probably the next few days, if we get follow through in the AI trade, we're going to get follow through in the indices for sure.
Brooke, weigh in.
What I'm reading across sources that I've spoken to this morning and from their notes is that ultimately after the report this morning is that the Fed's kind of driving blind here, similar to what Jerome Powell said earlier, that there's kind of fog ahead. This analyst from UBS pointing out that essentially because we're not getting that November jobs report until after that December meeting, that ultimately is sort of impacting the viewpoint that the Federal Reserve has. And this is something we've been talking about for months and months and months. This has been the AI tech-driven rally, and to see this pop in the market today definitely speaks volumes to the weight that Nvidia holds among investors' minds right now.
All right, I really enjoyed this convo today. I appreciate y'all, Thomas Hayes, Jim Bianco, and Brooke DePalma. Appreciate it.
Thanks, Brian.
All right, coming up, Julie Hyman and I will be sitting down with Walmart CFO John David Rainey on the heels of the retailer's upbeat quarter and outlook. We'll be right back with that chat on Market Catalyst next.